Welcome to the Whitwam Wealth Real Estate Podcast. Today's episode, high rates, higher return, how smart investors are winning in a 7% market.
Welcome to the Whitwam Wealth Real Estate Podcast with Scott Whitwam, your blueprint to financial abundance. Settle in as we explore the mindset and methods for wealth building through real estate.
Welcome back. I'm Scott Whitwam, and today's episode, higher rates, higher returns, how smart investors are winning in a 7% market. Today, we're tackling a question we've been getting asked. How are smart investors still buying real estate with interest rates above 7%? Let's be real. Most people hit pause when rates go up. They wait, they hesitate, and they sit on the sidelines. However, experienced investors are doing the opposite. They're leaning in. And today, I'm going to break down how they're making deals work. Here we go. Number one, mindset shift. First, it starts with a mindset. Smart investors don't obsess over interest rates. They focus on opportunities. They rely on the fact that reality is different than rates. See, rates don't kill deals. It's mindsets that do. Bad numbers will kill a deal. When rates rise, competition drops. That means fewer bidding wars, more negotiating power, and better pricing. Instead of being obsessed with rates, know your numbers to determine if a property is a great deal or not, because rates change all the time. They'll go up and they'll go down. And sometimes there's major market shifts like we've been in here in the last few years. But you can never fix a bad purchase. So make sure your numbers work. Number two, buying below market value. Smart investors buy below market value. With less competition, many sellers are open to better offers. And smart investors are negotiating hard. They're working price reductions, seller concessions, repair credits, closing cost assistance. They're trying to find every niche in the deal to get the price down where the numbers work. Always remember, the money is made on the purchase. Let me say that again. Always remember, your money is made on the purchase. Your money is made when you buy, not when you sell. So even at 7%, 10%, 15%, or 18% rates, you can make money if you buy right. Number three, creative financing. This is where investing can get exciting. Top investors are using other people's money in these creative ways. Seller financing. Make the seller your bank. Why don't you have them finance the deal? You can probably negotiate better rates and better terms. They're not going to be as critical as a bank. They're not going to go through the in-depth evaluation like a bank is. So seller financing's a great opportunity. Joint ventures. Who's to say you have to make the payments? Find a joint venture partner who can profit from the deal. Let them make the payments. The interest won't matter to you because they're making the payments. If you buy the property right, you can just work that into the deal. Lease options. If you work out a proper deal on a lease option, you can make that profitable. My first deal I ever did way back in the late 1980s, early 90s was a lease option. There's also assumable mortgages and subject to deals. A little warning here, though, on the last one on subject to. I know it's been a big thing for probably the last 5 or 6 years. There's some incredible coaches out there. I know them, and they're training people on how to do subject to deals. But I recommend that if you're going to do a subject to deal, you get an attorney involved to look it over. And here's why. Because many attorney generals are now looking and starting to intervene to determine if this could be illegal under some state laws, since subject to could be violating the acceleration clauses in a owner's contract. But I'll leave that to you and your real estate attorney to determine. But let's talk a little bit about the use of hard money. A misconception of many new investors is that hard money is for long-term financing. Hard money is a great option for acquiring great flip deals and co-living projects. If you want more information about co-living, My recommendation is get hold of my friends, Brian and Gina Kandeski. They've been on this podcast before. You can find some of the previous podcasts about them. They started their Green Light program, teaching people how to get into the pad split co-living space, how to acquire properties, and how to utilize their network of hedge funds and corporate buyers. So look up one of our previous podcasts on short-term rentals and those type of things. I think we actually have done a couple specifically on pad split, and Brian and Gina can help you with that. Their new program called Green Light. And then that can show you how long-term holding in a co-living space can be profitable using hard money. Okay, that's my commercial for the great coaching and education opportunity that they provide. But if you're in the market and you want to get into long-term hold, maybe assuming an existing loan will work for you. Some sellers have locked in rates at 3 or 4%. And some of those loans can be transferred to non-owner occupied buyers. Instead of taking a 7% or higher loan, you get their low rate. That can change the real estate investing game for some buyers immensely. All these creative deals take effort, and they also take education, right? Smart investors put the effort where most won't. Number 4, long-term vision. This is a very important part of real estate investing. You must be willing to play the long game. Real estate isn't about timing the market perfectly. It's about spending your time in quality ways to become smarter with your real estate investing. The investors winning today aren't trying to predict interest rates. They're focused on building portfolios and diverse investment opportunities. They know if a deal works today, it's likely to get better tomorrow because we're in this transition phase right now, and all indications are that interest rates are going to get better. Rising rents, equity opportunities, new strategies. Interest rates eventually will equalize. They'll equalize with prices, and there will be an opportunity to lower existing interest rates that you have on your property. You can change your interest rate basis. So here's some takeaways. 7% interest rates haven't stopped smart investors. We've just adapted and changed our strategy. Being patient and buying better deals for which the numbers work, using creative financing, maintaining cash flows, and negotiating harder than ever. And we are thinking long term. Stop waiting for the perfect time. That's all I have for this episode. If you found value in today's episode, be sure to subscribe and leave us a review. Share this with another investor who needs to hear this information. Thank you for joining this episode of the Whitwam Wealth Real Estate Podcast. Be sure to check out our previous episodes on real estate investing. You can find us on YouTube. You can find us on Spotify, Apple Podcast, iHeart Podcast, or wherever you enjoy listening to your podcasts. This is Scott Whitwam. Be sure to join me on our next episode of the Whitwam Wealth Real Estate Podcast, where we're wealth building through real estate.